Have you tried dividend investing? Do you know what dividend investing is? If you're already an investor, then you probably know what dividend investing is. Dividend investing is when you receive dividend payments on a regular basis because you own a part of a share in that specific company that you invested in. This is a long term process, so it isn't a way for you to earn a quick buck. But if you're willing to go in the long haul to have more income and grow your money, then dividend investing is for you. If you're patient enough, you can earn up to $100,000 or even more annually just from dividend investing. And if you add your principal investments that are also increasing, then all the more you're growing your money. It will surely take some time, some longer than others, but money is still money. If you're earning a couple hundred in a month from dividend investing, then that could still help you greatly. You can add the additional income to your investments, or you can use it for your expenses, or whatever it is you want to set aside the extra income for. So now you're probably wondering, how exactly can I do dividend investing? How can it be an effective way for me to earn additional income? Well, I've got you covered on that. First, let's discuss what dividends are. Dividends are paid to people who are shareholders. Shareholders are those who own stocks of the company. Why do these companies give dividends to their shareholders instead of keeping the money and investing it back in their company? This is because companies that are already big believe that a percentage of what they're earning is better spent if they give these to their shareholders, since they basically don't need to reinvest it in the company, given that the company doesn't have much room to grow anymore because they're already large companies. Aside from this, companies who pay their shareholders dividends usually maintain their performance even when the market is down. This is because investors still invest in their companies because they pay for dividends. Even if the market is down, they're most probably still going to receive dividends. Well, of course, that's unless the company's stability grows worse, that they have to decrease the dividends or are entirely unable to pay for the dividends. But this is very unlikely to happen, so you don't have to worry much about that. For those who don't have an issue with taking a bit more risk, can buy individual stocks of companies that also pay dividends. Some of the known companies who pay dividends give 2% or 4% of their net income to shareholders. If you don't invest a high amount, then naturally, at first you won't be receiving a lot of extra income from the dividends, but the value of the stocks that you buy do increase in value over time. So if you think that the company is a good company to invest in for long term, then that's when you decide on buying stocks of that company. You have to pay attention to the payout ratio of the company, which ideally should be less than that of 55%. People who are beginners in investing usually go for companies who think they will make them earn a lot more in a short period of time without considering the other important factors. What are these other factors? If the dividend is high, then it's possible that it's because the stock price or value of the company's stocks has increased. And if something bad happens to the company, then it's likely that they decrease the dividends or the company could get a debt and use it to pay their shareholders dividends. What is the optimal method for you to benefit from dividend investing? You can buy an index fund or ETF. If you buy these, then you're not relying solely on one company, which means the less probable it is for your dividends to be decreased or completely not given to you, despite the market fluctuating. The prices of these funds also increase, so every time you buy an individual stock, your capital appreciation increases. Now, for those who like taking less risk, dividend interests are a good option for you because your income is at least stable even during market fluctuations, because it's less likely that a growth stock's value will increase when the market is down, and it's more likely that the companies who pay dividends, who are usually large companies, are stable since they've been in the market for long, which means you'll still get paid your dividends. The disadvantage of dividend investing is that growth can be slow at first, but at least you have a more stable income with less risk involved. Usually, companies who do have dividend payments pay the dividends of shareholders on a quarterly basis, but there are also companies that pay monthly dividends. If most of the income that you're using is coming from dividend investing, then it's better to invest in those that give monthly instead of quarterly, because if you go for the latter, then it would be harder for you to budget the quarterly income you're receiving. Financial services, healthcare, and telecommunications pay higher dividends, but there is higher concentration in these sectors. You should diversify your investments because even though dividend interests may be stable in a way, they aren't a 100% sure thing. When the recession happened, the banking sector's dividends were cut into less than half, and other companies that weren't performing well either had to decrease their dividend payments. When a company decreases the dividends they pay, naturally, investors would want to shift and invest elsewhere with a company who either has higher dividend payments or a company who is more consistent with their dividend payments. If you want to increase your income, dividend interest is something that you can try. This will help you have more cash flow for you to have a higher budget for whatever it is, but of course, it's still better that the additional income you earn from the dividends are reinvested for your money to grow, while you buy more shares, which will increase in value. If you're coming up with a plan for your retirement, dividend interests can be a good option for you to consider, because while the market may be ever-changing, dividends are still relatively stable, which is good assurance that you'll have an income on a regular basis for the rest of your life. That's all for this video, eggheads. Don't forget to leave a comment below, hit that like button, subscribe, and click that notification bell to be part of our Egghead Finance community. See you in the next video.